Welcome to a Sunday edition of the Exploring Mining podcast. Today's interview is with Thomas Parilla, president of the Parilla Investment Group. He has 22 years experience on Wall Street, beginning with Morgan Stanley, and a strong background in domestic and international investment banking with a strict focus on the mining sector for the past 10 years. Investors are reminded our site does not make recommendations for purchases or sales of stocks, services, or products. Nothing on our site or in this interview should be construed as an offer or solicitation to buy or sell products or securities. Thomas, thanks so much for joining us on the show again. It's great to have you back. I feel like we have a lot to catch up on since we last spoke. The U.S. has given us some great chaos to watch as maybe for gold and silver this year.
You know, I think this is just the beginning. It seems like everything's chaos everywhere you look right now. But the Trump shooting, I think that's just the beginning of what we're going to see between now and November. And even after November, no matter who wins, I think you're going to have 50% of the population going to be up in arms. So we're headed for a lot of turmoil. Unfortunately, things like that usually drive people to gold and silver. So I think it's a perfect time to go into gold and silver. We're down big today. Gold's down about 60. But I would use any dip you have over the next 4 or 5 months. Just keep adding your positions. Even that GDP report today, after people rip it apart and really take a look at it, there's no real growth in the United States right now. This is just phony. It's made up for the election, I'm sure. The government is spending about $3.50 to create $1 of GDP. So when they print the GDP number and everyone says, wow, look how great the economy is, what they're really saying is, look how much debt we added to our economy this month. Because it's not growth, it's debt. And that's going to be something that comes back to bite us. I look around at the economy right now and I see parts of it that are just in shambles. This morning I saw New York Community Bank. It was down almost 7%. Now, for months, the Feds have been telling us, oh, that bank's solid, it's strong, their balance sheet's good, don't worry about it, it's not going to fold. Well, now all of a sudden we find out they're crying that they have huge loan loss provisions inside of it because they're commercial real estate write-downs. Well, of course they do. New York City, look at that whole area. If you go into the large cities, New York, San Francisco, Los Angeles, even down in Texas, which has a good economy, but go into Fort Worth and Austin, and you're seeing commercial real estate deals blow up one after another. And the deals, when they blow up, the loss that comes back, the default, it might be $150, $200 million that comes back to that bank. Now, New York Community Bank says, they're trying to clean their books up. And that's just what Lehman tried to do back in 2008. They tried to segregate their bad loans off and then get them off their books. But those still have to go somewhere. Those losses are piling up. I think the Fed is trapped in a position right now where they know they've got to cut rates. They're trying not to look too political while they do it because they want to pump the economy up to help the incumbents stay in office. But they have to do it slowly. So I think probably in September, the rate cuts will begin. And I would assume every meeting after that, you're going to see a rate cut. And that's going to be a perfect environment for gold. So I'm sticking to my numbers. I think by the time you get to January, we're going to see gold and silver probably roughly 30% or so above where we're at now. And that would move gold into the 3,100 range, maybe silver at 4,100. And I think the US dollar index right now it's at 104. I keep waiting for it to crack, but it hasn't cracked at all, and that's a compliment to the US Fed for defending it. But as soon as they take the rate hikes away, which they paused, and they start to cut, that takes away that one leg of support underneath of it. And then I think you're going to see it drop. Once it goes below 100, my guess is the drop accelerates. And I think we're going to see this thing somewhere next year around 90. And then over the next 3 to 5 years, I think closer to 70 as they revalue the dollar, probably more in a justifiable range where it should be. Your dollar should represent the strength of your economy. And right now, the economy in the United States just isn't fantastic. I mean, I know a lot of people went back to work after COVID, so that bumped up the employment numbers, just people going back to work. But that wasn't really jobs being created. And if you take the government spending away from it, I don't think you have any growth at all. Right now, the 10-year note's at 4.26, and that's kind of the one I'd keep an eye on. As the Fed starts to cut rates, I would assume bonds would rally, and you'd see that number go below 4%, and that should be really good for the economy. But the problem you've got is over the next year, you've got just a massive amount of U.S. debt that matures and has to be rolled over. Plus, you've got to go ahead and then take care of the new debt that's coming on board. So you could see, 13, 14, billion dollars come due real fast. And that's a lot of money that has to be rolled over one time after another. And you figure right now our government debt's up to we're getting close to 35 trillion. So you're going to have some real issues coming here. You look at the next 12, 24 months, no matter who wins the election, I think you're going to have some issues.
Do you think with the volatility of this summer, we're going to see demand increase? And I mean, where do you think we're at with supply? Because I feel like it's dwindling quite a bit right now.
Eric Sprott just put out a report talking about that exact situation where we're going to see supply get tighter and tighter and demand increase. And I know electric vehicles have kind of hit a bump in the road, and I think that's a good thing. But there's still going to be a certain amount of them built no matter what. Maybe it makes up 5, 10% of the auto market. And to do that, you're going to need copper, cobalt, silver. That's all going to have to go in lithium, and it's all going to have to go in each one of them. So you're going to see demand across the board in minerals, not just gold. But I think if you talk to most of the dealers that are out there, gold and silver, they probably have enough in their inventory to take care of one good bull market. So if gold were to go up 10%, all of a sudden now it's like 2,600. I think that probably cleans out most of their supply. And that's when you're going to start to see the premiums jump. And you could see premiums then jump, close to 30%, maybe 35%. So I would say for the people that are out there, they're thinking, you're on the fence, I would go ahead and buy while premiums are tight and just stick it away and hang on to it. And whatever you do, don't try to time it and hope you get the bottom. Could gold go down again tomorrow? Yeah, maybe. Flip a coin. To me, I say kind of like, so what? It doesn't really matter. What you got to look at is the end game. Where is it going to be come January, February next year? And I would say we're in the exact right sector you need to be in. People should just keep adding to their positions.
For the investors out there that are more maybe on the Bitcoin craze, do you think we'll start to see them translate into the gold and precious metals markets as well as things continue to become more volatile?
Yeah, I've always looked at Bitcoin a little differently. I know some of the real Bitcoin lovers out there, they kind of thought Bitcoin was going to come in and replace gold as a store of value. And I've argued since day one that Bitcoin is no store of value at all. But what it is an absolutely tremendous trading vehicle. The volatility in it gives you a great chance to trade it like a stock. But as far as a store of value, I mean, look at Bangladesh this last week. They had some civil uprisings there, and the first thing the government did is they shut the internet down. Now, what happens if you have your store of value all sitting in Bitcoin and the government shuts down the internet? Your value just went to zero. Whereas if you have physical gold or silver, well, that might have saved some family. So I look at them as two different animals. I still like Bitcoin very much, but I look at that as a trading vehicle, not as a store of value. I would imagine you'd see crypto do extremely well because as people begin to lose more and more confidence in the government, the way they're governing us, I think that it's going to push people to alternatives. And that's going to be, the crypto market. And then I think also in the gold and silver. So I would anticipate all three of them doing well, Bitcoin, gold, and silver.
Let's talk about some of the juniors that you love, because obviously we're going to need to diversify out there. So do you have any updates from Goliath or Juggernaut?
Yeah, they've had several news releases out there beginning to get their drill reports going. The first drills went off in Goliath, and they look fantastic. And Juggernaut got their first drill results going last week, so everything's up and running there. I think everything's going just as planned. And I would say from here on out, now that drill season has started, we'll probably see drill results coming either weekly or bi-weekly from here on out. So you'll see a whole pile of, really good news come out. And this is kind of an exciting time of the year for me. So it's funny, when you're 17, probably the nicest 3 words you could hear from a girl would be, I love you. And now I'm 59, and the nicest 3 words would be abundant visible gold.
I love it.
And that's what I look for. When you see those drill results come out and you see someone say, abundant visible gold, they're on the right property, and now it's just a matter of them proving the whole thing out. And if you look at Goliath's press releases, you'll see that line all over it. So they're on a property up there that is just fantastic. And I think when they're done testing out Juggernaut's about a year behind. I think when they catch up and they start testing it out, Juggernaut's numbers might actually come in better than Goliath. So both of them look like they're absolutely positioned perfectly. So I think there's going to be a great year up there. I'm going to try to get up to the Golden Triangle late this summer just to see the place. I can't wait to get there. I think we're sitting on really the last truly undeveloped mineralization in the world. And the Golden Triangle is going to be something 5 years from now I think everybody's talking about. Like Silicon Valley, when I was a kid, that was nothing, and then it got created. And now, of course, you're going to have this Golden Triangle. I think it's going to become a household name. And names like Dan Stewart, Roger Rosmus, they're going to become the Eric Sprotts and the McEwens of the world. People are going to know them as name brands. Crescat's going to become extremely wealthy. They were the first group to go in there, and they funded a huge amount of the juniors up there. So I would look for huge things for Crescat over the next 4 or 5 years, on the tails of these things. But yeah, it should be an exciting year.
I feel like this year is probably one of the most exciting summers that we've seen because people feel actually excited for drill results. It's been such a terrible market for the last year that no one's on holidays this summer. Everyone is drilling and working, and it's great to see. I love it.
Saying, get your bucket full when it rains. Don't wait for tomorrow. You got to go out and do it. And that's what these guys are doing up there now. They're working around the clock, getting their drill rigs in place, the platforms in place, and then they start pulling the results. And that's why I enjoy this time of the year. It takes all the fluff away from the investment. You no longer look at a guy and he tells you how he hit the mother load. You pull up his drill results, you read it, and you can see it for yourself. And I like seeing stuff like that, stuff in black and white. So yeah, it's going to be an exciting time of the year. I think we're going to have a lot of fun. Even though today the market's down pretty big in the precious metals, I think between now and January we're just going to have one nice month after another.
For investors out there, I know you talked a little bit about some of the key points to pay attention to, but if you are following the gold and silver space and precious metals and really any of them, what are you paying attention to over the next couple months over the summer the most, as far as like for buying like a dip or jumping in?
I think the Federal Reserve is going to control most of the new space, that in the presidential election. And that's kind of my thesis between the whole thing. If you look at what we're heading into, the economy's slowing, the commercial real estate market is imploding, regional banks are stressed all the way to the max. And now you're in the middle of a very contentious presidential election, no matter which way it goes. So I think it's the perfect environment. So I would tell anybody, every dip we have, I would go in and buy heavy, but don't be a day trader. I started in 1994, and I'm telling you, every genius I ever met that was trading in the commodities markets ended up losing in the long run. The only way to really truly make great wealth was to continue to stack. And you do that on every dip, you just try to buy as much as extra as you can and just keep stacking it away. If you can hold your own metals in your hands, do that. I know if you're buying stocks, that's a little different. You're going to have it in your portfolio, but I'm following a 90-10 portfolio where I have 90% in physical metals and 10% in junior exploration stocks. That works for me. Now, I would say for the average person out there, the bond market, there's probably some value in the bond market now because it's gotten absolutely crushed. And what happens when the Fed starts to drop rates? Typically bonds will rally. So I think you could also maybe throw bonds into there for the next 6 months and say that's probably a pretty decent buy. I don't think I'd want to hold them next year because there's so much supply coming on the market. But between now and then, I would imagine bonds would probably perform pretty well. So I would keep an eye on the Fed. My guess is the first rate cut comes in September. There's a couple guys calling for an earlier cut than that, but I don't think that's going to happen. But once they start the first one, that'll be the sign of the true pivot. And then from that point forward, I kind of think every meeting you're going to see another quarter point cut.
We talked a little bit about your gold juniors that you like. Do you have a silver junior that you really like out there?
Yeah, down here in the U.S., Mike Stark's got Arizona Gold and Silver, stock symbol AZS. I like it a lot. Same thing. They're proving out their properties. They're bringing quality people on board as employees and as directors of the company. And they're doing it the right way. They're doing it piece by piece. They're not diluting their shares, tremendously every year. So I guess that would probably be the third one down here. Up in I think on this side of Canada, critical minerals up there, John Newell. That'd be another one I'd kind of take a look at. The problem I have right now is there's so many targets and only so many bullets you can fire. But even up in the Golden Triangle, Tudor looks like a very nice buy to me. Stock symbol TUD. So there's a whole list you would buy. To me, anyway, I try to put a pyramid together and put my wish list. At the top right now would be Goliath, followed by Juggernaut, and right after that, I'd probably be Arizona, gold and silver. I think those three.
So I know we can't predict the future and we don't have a crystal ball, but should we make a prediction of who do you think is going to win in the election?
I think Trump wins, and I think from an electoral college point of view, it might even be a landslide. But I think it's going to be so contentious, and I think 49% of the country is not going to believe it after it happens. And I think you're going to have just civil unrest like we've never seen before. And I think it's going to be a real mess. I don't know why we've gotten to this point in the country where if you don't believe in one party's policies, you're the devil. At one point in time, we all worked together. And so I kind of hope things get better. My guess is it's going to get worse first, and then people are going to come to their senses and all get behind each other and start working together again. So I think Trump will win. I think he'll probably come in and have a real tough first couple of months where they go to war with each other. And then I think maybe people come to their senses and come back together as a country. And I hope that's what he does when he gets in there. I know there's going to be a feeling like vengefulness, go after everybody that went after you. And I hope they're able to reach across party lines and bring everybody back together and remind people that we do have a common goal. It's not who's in power. It's about how can you improve the United States. And we have to get away from this government spending. I mean, when you're spending $3.50 to create $1 GDP, you don't have an economy. You just have spending, you have debt. We've got to grow this economy. We've start building things again. I mean, when I was a kid growing up in Youngstown, Ohio, I can remember, you waking up on a Monday morning and the Kimmel Memorial Steel Works closed, and that was, I think, 11,000 workers lost their jobs. Over the course of time, I think it grew to be maybe 50,000 total. Those jobs have never really truly been replaced. I mean, I know they retrain everybody, but how many people could you retrain to be VCR repairmen? That's what they did back in the 80s. They've got to start growing the actual economy here. Put people back to work. Open the steel mills back up. Build new ones. Why do you go to China or Japan or Russia and you find brand new, beautiful steel mills? Why do you find refineries? Go try to set up a refinery in the United States and see how much luck you have there. That's why if you can find a refinery for sale, it's fully permitted, it's worth a lot of money because it'll save you years of time and hundreds of thousands of dollars just to get a permit. I think we've got to change our way of thinking. There has to be a balance in place where, yes, we're taking minerals from the earth, but when we're done, you go through a restoration and you put the property back how it was or better. And people have to understand that there has to be a balance. We're going to use some of it, but we're going to use it for good. And when we're done, we're going to return the earth, back to the way it was. Mining has become much more ethical than it was 30, 40 years ago. And I think from that point of view, the whole country has to look at it and say, maybe we all come back together one way or another. But the first 6 months or so, I think it's going to be very rough, no matter who's the president.
Wow. Well, I love the idea that the country could come back together again. I feel like that's definitely needed at some point in this world. It's been so chaotic, but I mean, on the positive, we've all had good opportunities and precious metals.
Always how it is. In the middle of chaos, there's always opportunities. So you just keep your eyes open and watch what's going on in front of you. And to me, there's just no other sector to be in that I see real value in it, that you're not taking a huge gamble other than precious metals. So to me, gold and silver is the smart play and the safe play, especially for the next 6 months. But for me, I think you could look out over the next 5 years. I would say over the next 5 years, I would buy every dip you get.
I love it. Well, thank you so much, Thomas. I feel like that's the perfect way to wrap up today. And hopefully we'll have you and Roger and Dan on again and after drill season and have some exciting stories.
Sounds good. Thanks for having me, Kelly.
Well, that does it for today's Exploring Mining podcast. If you'd like to be a guest or sponsor for this podcast, please contact investorideas.com. InvestorIdeas.com reminds all listeners to read our disclaimers and disclosures on the InvestorIdeas.com website. All investment involves risk, and this podcast is not meant to be an endorsement to buy or sell securities or products. To hear more podcasts, you can go to InvestorIdeas.com/audio. And a reminder, you can also hear our podcasts on iTunes, Spotify, Google Play Music, iHeart.com, TuneIn, Stitcher, Spreaker, and SoundCloud.